Hey everyone, welcome back to Corporate Decoder. Today we're diving deep into Lipocine Incorporated's latest financial report, and let me tell you, it has got a few twists and turns that might surprise you. Think of it like a pharmaceutical product announcement full of potential, but also with a healthy dose of reality checks. Before we jump into the numbers, if you love getting the inside scoop on what makes companies tick, hit that subscribe button. And hey, we've got a growing community over on Discord where we break down these filings even further, so come join us there. Link is in the description. Lipocine Incorporated, known for developing better ways to deliver drugs orally, has released their financial update for the period ending the 30th of September 2025. Now, you might think this is just another dry financial report, but there is a story here about clinical trials, licensing deals, and the constant hustle for bringing new medicines to market. Let's start by looking at what the company owns and owes. As of the 30th of September 2025, Lipocine had total assets of about $16 million. That might sound like a lot, but it is down from nearly $22.5 million at the end of 2024. Where did that money go? Well, their cash and cash equivalents dropped from over $6 million down to just under $4 million, and their marketable investment securities, basically things they invest in that are easy to sell, also decreased significantly from about $15.4 million down to $11.2 million. This all suggests the company is using its cash to fund its operations, which is pretty typical for a company in this stage of development. On the flip side, their liabilities, what they owe, are relatively small. Total current liabilities were around $1.9 million at the end of September 2025, so they do not seem to be drowning in debt. Now, let's talk about how the company is doing financially. For the 3 months ending the 30th of September 2025, Lipocine reported revenues of about $115,000, which is an increase from zero revenue in the same period last year. This revenue is mainly from royalties for the 9 months of the year. Their total revenue was about $831,000. This is a big drop from over $7.7 million in the same period last year. This sharp decrease in revenue is mainly due to a big drop in license revenue. In 2024, they brought in $7.5 million from a licensing deal, but that huge payment did not repeat in 2025. This highlights how dependent their revenue can be on these big upfront payments from licensing agreements. But where the real story is in their expenses. Their operating expenses for the 3 months were about $3.5 million, which is up from about $2.6 million in the prior year. The biggest chunk of this increase comes from research and development. Specifically, their R&D spending went up by about $1.1 million. This is largely because they are pushing forward with their LPCN 1154 drug, which is for postpartum depression, and they are conducting a big study for it. Their general and administrative expenses, which cover things like salaries and office costs, actually went down slightly. Looking at the 9-month period, their total operating expenses were about $8.7 million, down from over $10 million in the same period last year. While R&D spending increased, the decrease in general and administrative costs helped bring the total down. It seems like they are managing their overhead more efficiently. All of this means they are still losing money. Their operating loss for the 3 months was about $3.4 million, and for the 9 months it was nearly $7.9 million. While they are losing money, the amount they lost in the first 9 months of 2025 is actually less than the $2.7 million loss in the same period of 2024. So while they are still burning cash, they are burning it a little slower. And when you look at the final net loss, it mirrors these trends. For the 3 months, they lost about $3.2 million, and for the 9 months, they lost about $7.3 million. They are still in a loss-making position, but the story here is one of focused spending on key drug development projects, especially LPCN 1154, while trying to control other costs. Let's glance at their equity as of the 30th of September 2025. Total stockholders' equity was about $14.1 million, a significant drop from nearly $21 million at the end of 2024. This decrease is mainly due to the net losses they have accumulated. They also issued more common stock through their at-the-market offering, which means they sold shares directly to the public to raise cash. This is a common strategy for companies like Lipocine that need funding for their development programs. Looking at their cash flow over the 9 months ending the 30th of September 2025, their cash balance decreased by about $2.3 million. In the same period in 2024, it decreased by about $1 million. This shows they are indeed using more cash than they are bringing in through operations. Their cash used in operating activities was about $6.8 million for the first 9 months of 2025. This is quite a bit higher than the $2.9 million they used in the same period in 2024. This increased cash burn is largely due to the continued investment in their research and development programs, particularly the LPCN 1154 Phase 3 trial. On the flip side, their investing activities provided cash. For the 9 months of 2025, they got about $4.3 million from investing activities, mainly from selling off some of their investment securities. This is up from about $1.7 million in 2024. It seems like they are strategically managing their investments to generate some cash flow. And in financing activities, they brought in about $217,000 from selling common stock through their At the Market program in 2025. This is similar to the $209,000 they raised in 2024. This strategy of selling shares directly to the market is a lifeline for companies like Lipocine, allowing them to fund ongoing operations when revenues are not yet substantial. Now, let's talk about what all this means. Lipocine is in the challenging but exciting business of developing new drugs. Their main focus is on oral drug delivery systems, aiming to make treatments more convenient and safe. They have licensed their Talendo product for testosterone replacement therapy in various territories. This is a smart move as it brings in upfront cash and the potential for future royalties. The Verity license agreement, for instance, brought in significant upfront payments, but as we saw in the revenue numbers, getting these big license payments can be a bit hit or miss. For the 3 months ended the 30th of September 2025, 100% of their revenue came from one major customer, Verity Pharma. This shows a significant customer concentration risk. If that one customer were to have problems, it would hit Lipocine hard. For the 9 months of 2025, it was better, with revenue coming from 2 major customers, Ake and Verity Pharma, representing 60% and 40% respectively, while it is good that they are diversifying their customer base. The reliance on a few key players is something to watch. The company has been actively signing licensing agreements to get its Lando product to markets outside the US. They have deals covering South Korea, the Gulf Cooperation Council, Brazil, and of course the US and Canada with Verity Pharma. These agreements are crucial for their revenue generation strategy. They are structured to bring in upfront fees, milestone payments as the drug hits certain development or sales targets, and ongoing royalties. The potential milestone payments are quite substantial, reaching up to $259 million from the Verity deal alone. But remember, those are contingent on success. A big part of their future and a major reason for their current spending is LPCN 1154, a drug candidate for postpartum depression or PPD. They have advanced this drug candidate significantly and it is currently in a phase 3 clinical trial. The company believes this drug could offer a faster, more convenient oral treatment option compared to existing therapies. They had a positive meeting with the FDA and are actively recruiting for their phase 3 study. Success here would be a massive win, not just financially, but for women suffering from PPD too. However, drug development is a risky business. That is why we always look at the risk factors. One major risk is that LPCN 1154 might not get FDA approval, or if it does, it might not be commercially successful. They are also heavily reliant on third-party suppliers for the drug's active ingredient, brexanolone. Any issues with these suppliers could impact their development plans. There is also the ever-present risk of patent infringement lawsuits, which could halt or delay development. And let's be frank, Lipocine has a history of operating losses. As of the 30th of September 2025, they have an accumulated deficit of about $207 million. They expect to keep losing money for the foreseeable future as they fund their research and development, especially for LPCN 1154. The big question is always when, or if, they will become profitable. They believe they have enough cash to operate until at least November 2026, but that is an estimate and things can change quickly in this industry. They will likely need to raise more capital through stock sales or other means. Overall, Lipocine Incorporated's latest financial report shows a company actively pursuing its strategy of developing innovative drug delivery solutions. They've secured key licensing deals that are vital for their revenue, and they're making significant investments in promising drug candidates like LPCN 1154. However, the path ahead is fraught with the inherent risks of drug development, including regulatory hurdles and the constant need for capital. Their strategy of licensing out their existing product for different regions while focusing internal resources on new therapeutic areas is sound, but the reliance on a few key licensing partners for revenue and the high costs associated with clinical trials mean continued vigilance is necessary. They are also making smart use of their At the Market offering to raise funds, but this does dilute existing shareholders. What do you think about Lipocine's strategy and their financial standing? Are you excited about LPCN 1154 or more concerned about their cash burn? Let me know your thoughts in the comments below. If this deep dive helped you understand the financial world a little better, please give this video a thumbs up and subscribe for more. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and I'll see you in the next video.